Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what we expect for next week. And thank you for allowing us to do work that we find meaningful. Thank you for giving us the most valuable commodity you have, your attention. We promise to do our very best to give you a return on it. All righty, let's go to the charts. Starting out as always with the S&P 500 just continues to move higher. This is in the weekly chart right here. We can see all the moving averages are in sequential order. Here's the daily chart. All the moving averages are in sequential order. Had a little bit of a sell-off on Friday, but man, this thing just continues to grind higher. Seems to be obeying this 10 and 20 moving average, which are some of the weakest ones, but it just continues to push higher. Remember, about 3 out of 4 stocks are going to follow whatever this does. So if this continues to move up, it may not be our brilliance. It may simply be that the market is moving up. Yeah, continues to tap on all-time highs, just like gold and other things. And I don't really see any correction in sight. We might get a short-term correction here for a day or two, because that is a bearish engulfing. But yeah, probably continue to grind higher until it doesn't. The dollar took a dump. Dollar went down about 1%. We did have a reversal here on Friday, though, which makes me think it's probably going to bounce up to the upside. So that's what we would expect for the dollar. Oh, we got a question from Chris. Thanks, Steve. Love TradingView, but I cannot figure out how to place an indicator at where I purchased the stock. All right, here's what we do, Chris, is basically if you go over here and click on geometric shapes and then arrow mark up, and notice if I put this little star right here, it will add or remove it to our favorites up here. So we like to keep that one up in the favorites. So we just take the arrow and we put it on the point, and you find what day did you do it. So make sure that lines up with the day, and then what price. And if you can't get it exactly right on the price, then we right click, go down to settings, and we say we didn't buy it for 102.78. We bought it for 102.75, and then hit enter. And that's exactly where it'll come up. And then later on, months from now, when you click on that arrow, it will tell you in the blue here, the price that you bought it and the day that you did so. So that's how we place our orders on this. Maybe that'll work for you. All right, the 2-year yield is going down. The 10-year yield is also going down, but the yield curve inversion right here, right now, the 10-year minus the 2-year, the 2-year is still paying more than the 10-year, although we think this is going to start grinding up. See, we got the 200 moving average here is starting to move up. The 400 is starting to catch it. So we think maybe in the next few months, this is actually going to get out of clown world, move above the 0 mark, and the world will make sense again when long-term duration debt pays more than short-term duration debt. And still got to point out, the 1-month treasuries are still paying north of 5%. Coop says, why is a treasury at greater than 5% good when inflation is higher? You're right, Coop. Unless you've somehow figured out how to keep your inflation rate lower than that, you're right. You are losing every single year because your inflation rate is probably higher than this. So you're actually losing purchasing power every year. The reason we're putting this in here is because we believe that there's going to be a market correction. And if that happens, let's say oil gets to 40 bucks a barrel, not something that's really sustainable, but it could happen, especially in a recession. If a moment like that happens, our oil stocks are going to get wiped out. Exxon's going to go down. Chevron's going to go down. Occidental, they're all going to get hit. And if we don't have any cash, we can't take advantage of that. But if we have 20% of the portfolio in these rolling 1-month treasuries that are paying us something as opposed to nothing, we have to put our money somewhere, whether it's oil, whether it's gold, whether it's the S&P 500, or whether it's a vehicle or a house. You got to put it somewhere, or sitting in a bank account that's paying you nothing. But if you put it in these treasuries, at least you get something. And now Although you're losing a little bit of purchasing power each year, the dollar amount is going up, but what those dollars will buy is going down. If you keep it in these treasuries, at least you get paid something, and then you can take advantage of that opportunity when it happens. Does that make sense? Okay. TLT. Actually, this is kind of exciting with TLT. We just shot up above the 200 and the 50 moving average. So hopefully that will line out some kind of support for TLT here. And then we can exit our position in TLT in the next few months. We'll see. Nvidia lost this little down bar, bearish engulfing right here is about 190 billion. But the company is worth over 2 trillion. So that's simply a drop in the bucket. All right, story of the week, gold. It's making new all-time highs every day. I mean, every day this is just going higher. We do have a bit of a wick right here on Friday. If I move this to candles, maybe you can see it a little bit better. See that wick up at the top? A little bit concerning. It might start to roll over here, but the fact that we are maintaining above 2100, I mean, we even tapped a little bit above 2200, which is very cool. Very bullish looking chart. Super excited for gold. Been in this a while now, and now it's finally happening. So I wouldn't be buying anything on here or any of the equities as it's stretched like this. I'd want to wait for a natural pullback, but exciting nonetheless. It's up 4.4% for the week, which is a lot for gold. All right, and gold divided by the S&P 500 right now, for 0.43 of the S&P 500, you can buy 1 ounce of gold. We fully believe that this is going to revert back somewhere around 1 to 1. So we think that in time, we will be able to buy 1 share of the S&P 500 for 1 ounce of gold. And as we can see, it happened back here in 2011. We fully think that it will happen again here in the next year or two. Now, leverage bets on gold, GDX and GDXJ. GDX is up 8.4% for the week. And there you can see the leverage bet. So this is an ETF of gold miners, and it's up 8.4%, whereas the metal itself is only up 4.4%. And if we want to get a little more risky, GDXJ is up 12.4% for the week. Nice, shooting up there. Man, this would have been an amazing option. Up 12.4% for the week. You know, so junior gold miners, they're going to be leveraged to the upside and the downside. So if gold rolls over, this is going to go down very likely more than gold. Yeah, like these bets a lot. Franco-Nevada, the best gold royalty play on the planet. Week before last, the 104 limit order that we've been talking about for a long time. So far, this would have been the 4th time it hit when we got it back here. 2nd time, 3rd time, 4th time. This is probably the next one after getting your physical position. Get in the best gold royalty play on the planet. We got a dividend date coming up here. The ex-dividend date is going to be next week on Wednesday. Very often, these, a lot of options get sold at that time. Some people, as soon as they lock in that dividend, if they sell it on that date, they'll still get the dividend, so they sell the stock. So we might get a pullback here. Maybe that's what this was back here in anticipation for that, but usually coming up to the dividend, we'll get a little pullback. So if you still set a limit order for 105, 106, 104, or something like that, it may hit again. We'll see. Wheat and precious metals, our second favorite royalty play. We ran 2 options on this in the last couple of weeks. And let's see, we did 1 call option, a short one for like April 4th. Pulled that. That was awesome. We made 146%. And then we had a vertical call spread here that we closed as soon as it hit the 200 moving average. And that one was up 59% between the 2 bets. So I think we're going to be doing more options. Like these a lot. They just kind of keep my monkey brain busy, and I enjoy doing them. It creates a little cash flow so that, we can take that extra cash once that trading account gets above 10%. Once it gets up to 10 or 12 or 11 or 12, then we rotate that extra into companies like BHP and Rio Tinto and, dividend paying ones like that. excuse me, Gold Royalty Corporation. This one is just killing it, looking awesome. We're finally in the black on this one because our biggest bets were these down here. We have a pipe dream limit order in down here for $1.30. That's probably gone and not going to hit. But close the week at 189. I don't see any entries in right here. We'd like to see gold roll over first. If the dollar gets stronger, that's probably going to happen. And, you know, maybe something approaching like the 200 moving average, somewhere here around like 155, 160 is a possible limit order. Looks like we got a golden cross coming up right here. But the technicals are very stretched, especially in the daily. I don't see any entries. And Gustavo wants to know, how about Metalla? What are your thoughts? Disappointment. Those are my thoughts, Gustavo. I love Brett Heath. I think this company will do well, but man, this is like First Majestic Silver. This is one of the ones that we've just been absolutely pummeled on. We got this one around $9. Got this one around $5.25, and then we just made another purchase for $2.69. It's a 283, so this last bet's the only one we're up on. Man, if gold does what I think it's going to do and goes to, you know, 23, 24, 2,500 by the end of the year, I think this company will do fine. It's just not one of my favorite royalty plays. I like gold royalty a lot better. I like Wheaton Precious Metals a lot better. I like Franco-Nevada a lot better. Maybe I'm kind of questioning now that I'm verbalizing this while I'm in it. Maybe I just feel committed because we've had it for so long. But, you know, there is a little bit of a marketing play here too with E.B. Tucker. I like also that they consolidated and they bought Nova Royalty. And I think those two companies combined are a lot better than one. We'll see. Might be eating my words on this one. But that's what we've done with Metalla. Haven't sold yet. We'll see how it works out. Origin Royalties. This one is absolutely killing it. What is it up? It's up 13% for the week. Just wrecking it. I mean, got this one from the Rick Rule Royalty and Streaming Bootcamp. We're fine with our position. We're not going to add anymore. We're going to hold this one very likely for the duration of the gold bull market. And love this company a lot. And Sergio wants to know about DRD Gold. This company, let's see, what was the market cap? 1 point something? No, not even that. 686 million USD. It's okay, so decent market cap. I think you can do limit orders here. What's the volume like? Maybe I would keep these. I'm sorry, I was thinking maybe you could do market orders, but I would still do limit orders in this one. I don't see any technicals on this one that would suggest we're at a buy now, but if I believed in this company, if I knew something about it fundamentally, which I do not, but if I did, I would probably place first limit order around 680, maybe 675, and then the second one down around maybe $5 seems to have a decent amount of support. So that's where I would be placing limit orders if I was interested in this company. But right now the technicals are just too stretched. Looks like we had a bit of a sell-off here for the dividend, which is tick if you could catch it at around 650. But maybe it'll hit the 400 and come back down. I don't know, but it's definitely on a downtrend line. The 200 moving average is sloping down, which is not good. I wouldn't be making any entries into this just yet. And Barrick Gold, man, this last limit order is amazing. Would have been nice for an option, but wasn't there. So on these companies that we want to keep in our long-term portfolio, as it goes down, we average down, we buy more shares as it gets cheaper. And as far as technicals, I don't see any entries right now into this. We want to see this correct. If gold comes back down, this will as well. It might create another entry point. And Newmont, Alex says, is Newmont still good to go into? Just thinking of investing now and letting it ride rather than trying to catch another dip. Okay, so let me get that out of my head that we have to buy as it gets cheaper here, Alex. As far as a buy now, I mean, yeah, I guess it's not bad. I mean, it's cheaper than our first purchase over here at $34.50. Another one at $34.25, $33.91. What's that one? 33.62. Yeah, I suppose it's not bad, but I just really like placing limit orders going down here. I mean, if gold rolls over, this is probably going to get cheap again. You know, why not just put in one for 33, 32, 31, 30, and it'll probably hit. You know, if you don't want to do that and you just want to get in now, I suppose it's not a terrible time, although the technicals are saying to wait. But yeah, I suppose you could if you're just going to make one purchase and be done and go fishing for 2 years and come back and look at it. I think this will probably be a double in 2 years. You know, but if you can get it for 10% cheaper, why not? Agnico Eagle. Oh, this is just a little darling here. Way in the black on this. Love this one. I mean, it's up 10% for the week. And just skyrocketing higher, looking super bullish, probably going to roll over actually, but love that it's above the 200 and the 50. All these are shooting up. Paid a dividend right here, so the ex-dividend date was February 29th. Had a hot minute to get in there, around 47, 48 bucks, but now we close the week just south of 55. G Mining Ventures continues to move. I like this one a lot. You know, up quite a bit for the week. What is that? 6 or 7%, something like that. 7%. Love this company. Development play down in Brazil by a family who has done this times before in the same climate and weather patterns. So like this company a lot. Speculative play. But should be pretty good. All right, and silver is up 5% for the week. We're coming up on some interesting resistance here. So around 2450 is a major line of resistance, which is basically where we're at now, 2455. I could see this correcting back down in the short term, but you know, the real one we're going to watch is up here at $26. Once it breaks out at $26, there's not as much resistance above it, but there is a boatload of resistance between where we are now and 26. But we did break through some significant lines, and that would be the 200 and the 50. So that is silver. The way we played this, we got one bet in down here on SILJ, the Junior Silver Miners ETF, at $8.02. And then a few days later, we took out an option at about the same price, went down slightly, and then shot up. So that was cool. We sold that for a 41% profit. I guess we could have let it run another couple of days, but just with that bearish reversal bar right there, we ended up closing it. But then the next 3 days, it just ran up. So hindsight's 2020. I can see straight looking backwards. And what's the next one? SILJ. Scotty says, like many of the gold and silver miners, Hecla has been vanquished. Please share your thoughts on Hecla. It is up 9% for the week, Scotty. And that's pretty interesting. 9% for the week. This is super leveraged to silver, kind of like GDX or GDXJ is leveraged to gold. You know, so silver went up 5%. This one went up 9%. I don't know anything fundamentally about this one, but if I were a betting man, and I am, it looks like, what, 350 is going to be the level? That looks pretty good to me. Yeah, I would say 350, 360 for a limit order is probably the next real support. I would do somewhere around there, somewhere around 355, 350, 360, something like that, I think might be for a nice limit order. And Endeavor Silver here. This one's had a heck of a run in the last couple, I don't know, 6 trading days or so. If you guys remember, David Skrika, he was mentioning on the show that he was thinking about taking an option on this one, and we put an alert right here at 130, and if it crossed that, we're going to start to become interested. Never got there, only got down to 144. I think we were trying to pick up nickels in front of a steamroller. But David apparently got an option right here, so good on him. I mean, this is up 30% in just the last few days, so I don't even know what that is in options world. Depends on the expiration date. But if this comes back down, if silver gets hit and rolls over, we might get another opportunity. But you can't help but notice going back over time, there's only been 1, 2, 3, and hopefully a fourth time in history where it gets down around $1. And if it does, we'll probably be placing some type of trade on that, just because it's so leveraged to silver. We'll want to time it with the silver chart. And copper up 1% for the week. Dr. Copper. Yeah, don't really see any entries here. Don't really see any reason to sell. We're going to want to hang on to our copper positions for probably half a decade. Yeah, don't see anything there other than it's up slightly for the week. Kind of a noisy chart. COPX is the way we're playing it. We had some entries here 3 weeks ago or so, but it is getting pretty high in the cloud, so expect a little bit of a pullback. COPJ, same thing, no entries. Reversal bar to the downside, probably coming down next week if copper gets dragged down. Arizona Metals, this was interesting. We had a limit order for, I think it was 122. That one hasn't hit. Shot up out of bed, stood right up, up a bit for the week. I think it was 13%. Check out Peter Granich's Twitter feed, and he gives a detailed update on Arizona Metals. So if you're in this company and you want to know about it, check that one out. Uranium. What is going on? I'm actually starting to get some hate mail now for uranium, which makes me think that it's probably time to buy again. We didn't think we'd be buying any more uranium, but we've sold to the point to where we're riding on the house's money now, and we paid ourselves a little bit also in the process. So I don't know. I mean, it looks like a pretty good deal to me. We got 2 purchases here in the last 2 weeks on the Sprott Physical Uranium Trust. I got one in last week for $19.67. At that time, I believe it was a 14% discount, and same with this one over here for $20.30. I think that was a 13 or 14, maybe 15% discount. This is essentially the spot price of uranium, okay? Around $91, $92. The term contracting, the ones going out further, means that it's basically more than a year. And those are contracting out at 107 to 113. So that's essentially telling you what these utilities and what traders think is going to happen in the future. So if they all think that the price is going higher, this short-term one has so far followed that. You know what I mean? Buy down here when it's cheap, when each one of these arrows you see was at, more than 10% discount. And once it started getting into a premium here, we sold it. Now that it's getting into a discount again, we're buying it. And the equities seem to really follow the spot price. So as the spot price and the Sprott Physical Uranium Trust trades at more and more of a discount, that's generally speaking the time to buy. And as that reverses, then it's time to sell. Cameco, kind of grinding out a little bit sideways here. I suppose there is a bit of a tiny little up channel right there, although not one that I would want to bet on. If you're going to make any kind of entry into this, I'd like to see it come back down to the 200 moving average at least. Kazatomprom, same kind of thing. Although there was a tick, if you could catch it, on Thursday. Just got down there for a hot minute, so a limit order of like 38.50 would have got you. There is a bit of there it is right there. That's kind of the support line. Hit the 50 moving average, but remember, this company isn't really heavily traded. Only 25% of it is available to retail. So most of it's state-owned. URA, this one had me a little concerned here. So if we look at this last reversal bar right here, the charts were looking decent until on Friday. We got this bearish engulfing. I think this is kind of like a bearish flag pattern right here, which usually breaks to the downside. Not ideal. This could have a little ways to go down. We haven't sold any yet. We just got in down here on these where you see the arrows. So if it did actually break to the downside and set up some sort of support, we might actually buy more of this. URNM, same kind of thing. See, so bearish engulfing on Friday here. So that's pretty bearish looking. And you can also see it looks like we're setting up a bear flag. So that is not a bullish sign. Looking kind of iffy here. But, you know, remember, when you're getting into uranium, start with the physical first. Start with the Sprott Physical Uranium Trust, just like with gold and silver. You start with the physical stuff first, and then you branch out into the equities. You can do the same here. Start with Sprott Physical Uranium Trust, and then probably second would be URNM. And then after that, you can maybe do URNJ for the juniors. This one's still, yeah, not bearish engulfing, but not looking great. You know, I think the next support line is probably going to be around 2250, somewhere around there. I think that, and the smart people, John Quakes and Justin Hune, you know, the guys we follow on Twitter, they believe that the spot price is going higher. If that is true and the case, the equities are going to go with it. And this one will be a leverage bet on that. The Sprott the Sprott Junior Uranium Miners ETF. UROY, Uranium Royalty Corporation, the only royalty play in uranium. We took an option out on this, and so far we've just been wrong. We could have sold it for a little bit of profit here, but we got it going out to October, so we're not super worried. We have a lot of support underneath it right here. It did go through the 200-day moving average, and it also it seems to be obeying this 400 moving average. So we'll see if that holds or not. But like this option a lot. If we do have another move like this, you know, even just a little steady one up like that, this option is going to pay really, really well. Uranium Energy Corporation. Same kind of pattern. So you can see with all the uranium charts, they're all kind of following the same pattern here. Is a little bit of support around 625 or so. I wouldn't be making any bets on this yet. I want to see the technicals start to sell off a little bit. I want to see the spot price start to recover a little bit and start to catch up with term. And Energy Fuels. This one, we took out an option on Friday, so we caught it right down there. And basically what we're looking at here, I'm going to go to the hourly. We can see we got a double bottom right here, and then it just started to go up. Here's the 30-minute double bottom right here, just started to go up. So this is a leverage bet on uranium, probably just as much, if not more, than Uranium Royalty Corporation. But if this is going to move up in the short term, then this one's going to do quite well, and we'll get out. Denison Mines. This one is kind of exciting. Love this company a lot. Their in situ recovery is, if this actually works, it's going to be amazing. Still don't see any entry points. See, they're all kind of following the same pattern. Looks like a little bit of a bear flag here. But, you know, the fundamentals on uranium are extremely bullish. I would say with uranium, most trades or most investing and trading I do, I weigh the fundamentals about 50%, and then the technicals tell me when to buy, and that's the other 50%. With uranium, I've found over the last couple of years that I think the fundamentals are probably 60 or 70% of my timing into entry, and the technicals are about, you know, 30 or 40%, something like that. I put a lot more weight on the fundamentals with uranium than I do anything else. This market cap is extremely small. It's like 60 billion, you know, I mean, it's just a tiny, tiny market cap. You know, one hedge fund coming in and buying up these ETFs like completely moves the market. It's super small, super volatile, which is why we love it. Okay, next gen still, I mean, we had a bit of a double top right here, almost a triple top, just kind of in this zone right here. I want to see this correct back down, maybe get back down around like 650 or something. That might create some kind of entry point, some kind of back support. Don't see any entries on this right now. And let's see, SMR. Joe Warren wants to know about SMR, and I can see why. My God, look at that. That is quite a run in the last few days. So this is basically a company that is putting together small modular reactors. So think of what powers a nuclear sub or an aircraft carrier. These guys are buying or are building small modular reactors to place in, small cities to power them, right? So a small nuclear power plant. And now they're not actually selling these things yet. They still got to get some permits. I mean, there's no small modular reactor, to my knowledge, company that's actually selling them on the open market. They all got to go through this permitting process. And according to Doomberg, this company is the furthest along in that process. So extremely leveraged to uranium. But yeah, I don't see any entries on this or anything. There actually was a really nice entry back here in January, where you see you got this double bottom, and look at what it's done since then. But as far as an entry now, I just don't see it. You might have been able to catch it again with this retracement. Then you would have had another double bottom right here inside the retracement. That could have been one that you could catch in late February. But as of right now, I mean, this is pretty stretched. Like, look at all the technicals here. We can pull up the weekly, and it's getting pretty high in the weekly too. Look at that volume right there. That's pretty impressive. But yeah, I don't see any entries into this. Wait for a pullback. Oil is down about 2.5% for the week. Still obeying the 200-day moving average, so we like that one a lot. Although it is a bearish engulfing bar here on Friday, so our bias is to the downside for oil. We might also have a little bit of a bear flag here, maybe some kind of pennant. Yeah, our bias is to the downside for the near term for oil. May create some opportunities to get more, although we got a lot of oil. This is our favorite oil ETF, XLE. Now, despite oil being down 2.5%, this one is up 1.3% for the week. Looks good. Technicals are getting pretty stretched though, so if oil does correct, this is going to correct with it. But this is for the long term. They just pay dividends. This is part of the long-term retirement portfolio. ExxonMobil looking amazing, above the 200-day moving average, and despite oil being down 2.5%, this one is up 2.5% for the week. Like this company a lot. Amazing dividends, and yeah, great way to play the oil sector. If we do get a correction in this, then if we get down to these levels or lower, we'll be buying more. Blackstone Minerals. There was a tick if you could catch it. So this was the dividend drop right here, got in at 15 bucks. And then there was another opportunity right back here on March 4th where it hit 15 again. We debated putting in an option right there, didn't do it. And then we put one in the next day, Tuesday, got in an option. It's pretty long dated if I remember right. Yeah, it's going out almost a year. So if Blackstone Minerals moves up, this option is going to move up pretty well. Do got to be slightly careful on ones like this because the volume is pretty close to our minimum that we're going to want. Ideally, we want like 600 to 1 million shares traded every day. When you look out on the options chains, you want to make sure that there's enough traffic there so that if you buy these things, you'll actually be able to sell it. This one was bordering right on that, but it just looked a little too good for us, so we ended up taking it. And if you are in Canada and not the US and you want to play an oil royalty, this is the one you want. Freehold royalties. And it's actually kind of coming up on some interesting support. So we don't like that the 200 moving average is angling down. Would rather see that move up. But again, if this is part of your long-term portfolio, average down and put more into it as it gets cheaper. So the first line of support right here is going to be around 1350, and then the next one down here is going to be around 13 bucks, and the one after that 12, something like that. Seems like a decent entry point. Yeah, around 12. There's a decent amount back there. So this is for Canadians, not for Americans. Although Americans can invest in it too, but why not just get Blackstone? It's essentially the same thing. Okay, and natural gas futures down slightly for the week, coming up on a little bit of support right here. The way we're playing this is going to be Devon, and we have a pipe dream limit order in here for about $41. It's closed the week at 46.16. Like the dividends of this company a lot. They have an amazing arbitrage on natural gas. Equitable, same thing. Pipe order limit, pipe dream limit order down here around $32. It closed the week at 37.52. I don't see any entries into this. We're going to want to see a little bit of consolidation. Technicals are getting kind of stretched, but this is another way to play North American natural gas. All right, and coal. Let's see. G wants to know, new subscriber, welcome to the Hive, G. I've been going through and starting some watching your older videos. I'm intrigued by the coal stocks. You'll have to excuse my ignorance. No, you're good, man. Retail. How does a retail investor get exposure to thermal coal and the met coal markets you were showing in the video? Okay, so these are the futures markets. This is essentially, so this is thermal coal. This one right here is met coal. Basically what we do is we're going to be betting on coal companies. So like Whitehaven, AMR, Warrior Met Coal, ones like that. And so you look into the companies and see what they're generally pulling out of the ground. If you're new to the coal sector, I would recommend this, sir. I would recommend this ETF. It doesn't have a lot of history on it, and we don't have the volume yet to support buying any of it. I mean, look at this one day right here. There was 900 shares traded, and this thing's only trading, it's trading at less than 25 bucks. Okay, so there's just not the volume yet that we can get into this thing, although I suspect there will be. And come April, May, June, we're going to start getting into this when we get pullbacks here. So looking forward to this one a lot. That's what I would recommend for these, because this ETF was helped put together by our coal expert, Matt Warder. All right, and Glencore, like this one a lot. So this is another one of those long-term portfolios. So as it gets cheaper, buy more. And super excited for their deal with Tech. We think that this is going to be paying off here in about a year and a half or so. We have one limit order in down here for around $8.56. That may or may not hit. I don't know. We'll see. But if you don't put the limit order, it can't hit. Close the week at 10.19. So it's starting to reverse to the upside. I don't see any buys in this right now, although there is a fair amount of support right around here, but I would be patient and wait it out. Bitcoin is up 8% for the week, tapping on all-time highs. Oh, it looks like it might have exceeded and got all-time highs there for a hot second. I think a big part of this is probably the halving that's coming up. And so generally speaking, when it gets halved, it gets a little bit more valuable. But yeah, I don't see any buys into this. Although when we had Patrick on the show, he said as soon as it goes above 60,000, he'll be in. So good on him. He just made about $8,000 for every 60 invested. And remember, when you get Bitcoin, kind of like gold, you want to hold it. You want to have physical possession of it in the form of a ledger. And, you don't want to be buying it on these ETFs where they own it. And if something goes wrong, you cannot get it. You're simply putting money into that ETF and they are buying the Bitcoin and storing it and keeping it for you. And if S hits the fan, you're not going to get any. So you want to physically buy it and take possession of it and hold it if you're going to play that game. All right. And Platinum's up about 3% for the week, finally above 900 bucks. Don't see any entries into this right now. If you're going to play Platinum, you can play PPLT, Platinum Aberdeen Platinum Physical Platinum Trust. I'm blanking on it. Anyways, the ticker's PPLT. Don't see any entries here. Still going to be waiting for Russia to rid themselves of all the platinum they can to pay for the war. Same for Palladium. Palladium's finally up above $1,000. Had a nice move this week. What is that? 6.5% for Palladium. Don't see any entries here. Here is platinum and Palladium added together, divided by 2, and then divided by gold. So we can see we are at historic lows going back to the 80s. I mean, 0.44, pretty incredible for the two of those as far as how cheap they are. So if you just want an easy beta play on platinum and palladium, the Sprott Physical Platinum and Palladium Trust is the way to do it. The easiest way, because you get both of them. And don't see any entry points, but maybe a limit order around like, I don't know, 850 or something like that will at least get you in. BHP. All right, here's on the weekly. Went through the 200 weekly, although it is sloping up, which is good. As far as on the daily, drop below the 200 daily. They just are about to pay a dividend. Oh, it looks like they just did. When is the ex-dividend date? Okay, comes out on March 28th. Okay, so that's part of the sell-off here. We might actually have an entry point. Yeah. Okay. Basically, for our long-term, I'm thinking of an option here. Basically, for our long-term portfolio, we're going to probably put in a limit order here for around 55, and then maybe another one for 54. And yeah, I'm gonna have to talk to Daniel about this one for an option. This could be interesting because look at that ex-dividend date right there. Yeah, like that a lot. Okay, Rio Tinto. Okay, this one fell out of bed on Friday, which is amazing. We want this thing to get cheaper because this will go into the long-term dividend portfolio. We're gonna look at around, probably going to be placing limit orders around 62, 60, and then 58 would be the back up the truck moment. So that's what we're going to be looking at for Rio. And someone asked about VALE, and I'm sorry, I can't remember who. I didn't write it down. As far as an entry point into here, we got in here and then out here after talking with Rick Rule, and I think we made, I don't remember what it was it like 20 or 25% with all the dividends? I mean, they pay pretty amazing dividends, but we're a little bit worried about that dam failure that they had that killed all the people. The litigation with that may not be up yet. But I did put in a price alert here for when it crosses 22.59. Then I'll get alerted and I'll become interested in possibly placing an option on this one. We'll see. But we got an ex-dividend date coming up on March 12th. So we might be getting a little bit of a sell-off here in the next few days. And if we do, that might create a short-term trading opportunity. And Pfizer, why are we bringing up Pfizer? Simply because we found an option on it. That's it. That's all we're doing. We don't believe in this company. Travis Kelce can have it. But if we can make some quick money on it, then we will. And we got in down here right around where it was just below $26. It's up at 27 now. We could take it out for a profit right now of I think about 30%, but we think it'll go up a little bit more. And then we've got our idiot alert right here at 27.70. So with our call option at 27.50, we'll see how this one goes. This is just a quick trade. One that we're contemplating an option on here is This is Unity Software. And again, these are, well, we have our buddy Eric look at the fundamentals on these, and then if we like the technicals on them, then we fire. And kind of coming into an interesting point right here. We need this one to sell off just a little bit more, and then it's going to line up and get right in that zone right back there. I mean, like just with all this support, I think that would be a great short-term trade, but we'll see. All right, well, I hope you guys got something out of that. If you're enjoying the show, you can donate through the link down below, and thank you to all who have done so. Thank you for the supers, STP, and thank you for always being here. If you want to sign up for Rick Rule's next boot camp, we will be there. There is a link in the pinned comment below. I'll also be going out to Boca Raton and doing a bunch of interviews for the Rick Rule Symposium. There's a link down in the pinned comment below for that as well. Would love to see you guys out there and meet you face to face. We'll have a beer together. It'll be a lot of fun. Thank you for tuning in. Hit the like and subscribe, and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.